Hey, welcome back to my YouTube channel. We are talking market condition updates for the second week of December 2019. And it's me again, Nathaniel Lee. I'll be taking you through. Now, before we go, it's second week of Christmas. So before Christmas, we got a special Christmas promotion for you. Check out our website, Streetwise Education. Sign up for the email. You get free stuff all the time. If you got nothing else to give to your friends this year for Christmas, well, check out the course at Skillshare, how to get started in the stock market for the millennia, or the method of investing at Udemy. Now, if you don't have anything to give them knowledge. Okay, cool. So let's get started. Now, market condition, I'm looking at the key economics indicator for the fourth quarter of 2019. There's 9 key area I'm looking at. And also, we'll give you the forecast for the first quarter for 2020. Okay. So first thing first is GDP growth is 0.5. It's not very good. We need a bit better than that to stimulate the economy, even though the stock market is running quite hot. The last 2-3 days been dropping like crazy. If you saw my YouTube video, you know that is about to happen anyway, so it's nothing new. I was quite surprised that last week a lot of the commentator was saying that, oh, they didn't know it's going to happen. But, geez, if you actually watch the charts, you see it happen. So, this is part of it. Now, the other thing we're looking at is interest rate. We're in record low, 0.7, 0.5%. If we drop any lower, we're going to have quantitative easing, and the Australian government and the Reserve Bank is actually didn't want to think about it, but it's most likely it's going to happen. So there's more talk about it. So I'm going to keep you posted on that one too. The other thing we're looking at is inflation. It's sitting at 1.7%. It's because lower interest rates stimulates more people buying, so that's what's happening. Unemployment is sitting at 5.3%. It's not doing too badly, so it's pretty good. Government debt to GDP is 41, so it's a little bit high, but I think the forecast for next year is going to drop a bit more, so that's a good sign. Balance of trade sitting at $900 million at the moment. Our credit rating is still AAA. That's really important. And current account to GDP is minus 1.5. It hasn't changed since last quarter at third quarter in 2019. And finally, of course, we have our business confidence. Now, the business confidence forecast for the fourth quarter 2019 was supposed to be 0. And we actually got 3 index points, which is good. Now, compared to the past, we used to have 20. I mean, that's a big difference. Okay, so that was P2008. So it's been very low for a long time. So that's one thing. Now, so this covers the fourth quarter of the key economics indicator. I'm going to look at the next quarter. So what it's going to be like, okay? So the forecast for first quarter in 2020 for GDP is 0.3. It's going to drop again, so that's really worrying. If we drop below a certain point for so many quarter, that will become a recession. So, this is a very concerning thing. So 2020 is going to be an interesting year. In interest rate, actually, the forecast for next 3 months is going to be 0.5%. Now, currently, we're sitting at 0.75. If it does drop to 0.5, this is quite low. So quantitative easing is definitely going to happen if we get to 0.5%. Now, if that's happening, inflation is going to go up 0.1%. So it's going to go from 1.7 to 1.8. So that's going to be interesting. Unemployment rate is going to drop to the forecast is 5.1. So the government will create more jobs because of that. So that's going to be interesting to see. The other thing is the government debt to GDP is going to drop from 41 to 38. So that's a good sign. Now the other thing is balance of trade is going to be $1.6 billion. So it's improving. So it's about $700 million more for next quarter. Now, credit rating is going to still sitting at AAA. So as long as nothing happens, we should be okay unless there's some major disaster happening in our economy. That rating should stay the same for the next quarter. Now, the current account to GDP is going to still be negative 1.5. Same thing happened in the fourth quarter in 2019, so just be aware of it. Now, the final one is business confidence. The forecast looking forward is that the business confidence is going to be 5 index points, so 2 points higher. Now, previous quarter we had 0, supposed to be 0, but it got 3 points. So it would be interesting to see if the business confidence is going to get to 5 index points. So, well, happy hunting, guys, and I will keep you up to date once a month with the key market condition and give you some insights in what's happening. If the government is going to continue with, or if they're going to do the quantitative easing, what will happen? And we'll probably have a guest speaker coming on and to talk to you about it. So, look forward to seeing you. Remember, if you've got nothing else to give your friends or your family, go check out my courses, okay? And I'll talk to you soon.